Hello friends, welcome to my channel Stop. Now I am going to discuss about the topic mutual funds. Mutual funds is considered as one of the best investment tool. Through mutual funds you can earn huge amount of returns if you hold mutual funds for a longer period of time. Guys, this video is made specially for those guys who want to invest in mutual funds. Let's get into the topic. What is mutual fund? Mutual fund is nothing but a open-ended professionally managed investment fund. In mutual fund, a professional manager will manage all your funds. Mutual fund pools money from many investors to purchase securities. It means generally in stock market you can buy shares and you are the owner of the stock shares which you buy, but in mutual fund there are several owners for a single mutual fund. That means for a single mutual fund there will be many investors who put their money into the same mutual fund, and this money on a whole will be managed by a fund manager. In short, I can say that the amount invested by a number of investors managed by a single fund manager in a mutual fund. Now coming to types of mutual fund. There are several types of mutual fund, but I have considered only few for your easy understanding which are most popular. First one is balanced or hybrid funds. These are funds that invest in a mixed proportion of equity and debt. Equity funds means you are investing in stocks. Debt means you are investing in government securities, government company bonds, etc. These funds will give you moderate returns and has moderate risk also. The next one is money market funds. These are the funds that invest in liquid instruments. Example, treasury bills. This will be used by governments. And CP means commercial paper. These are used by corporate companies. CD, it means certificate of deposit. It is similar to a fixed deposit where you can invest in a bank and you can get the returns after fixed time. These money market funds are for those who can park their surplus amount and get a good amount of moderate returns. Next one is equity funds. These are funds that invest in equity stocks or shares of companies. These equity funds has huge risk and they can give you high returns also. Next one is debt funds. These are the funds that invest in debt instruments, example like company debentures, government bonds or any other fixed income assets. These funds are considered as very safe, but they will give you only fixed returns. Next one is index funds. These are funds that invest in instruments like particular index or exchange. That means you can invest in Nifty index plan, Sensex index plan, like that. In this, it has moderate risk, but it will generate returns based on the movement of index value. Next, I am classified mutual funds based on the categories of market capitalization. First one is large cap mutual funds. It means the mutual fund will invest only in large cap companies only. Second one is mid cap mutual funds. A mutual fund that invest their money into only mid cap companies. Third one is small cap mutual funds. It means the mutual fund manager will invest only in small cap or newly emerging stocks. Guys, I have classified because one must invest their amount of savings into 60% into large cap mutual funds, 20% of their investment into mid cap mutual funds, and remaining 20% into small cap mutual funds. Guys, this categorization is very helpful because you are holding your 60% of amount in large cap funds which are considered more safe and they can give moderate returns. Mid cap mutual fund are moderately safe and they can give good returns, whereas small cap mutual funds they have huge risk and can give you higher returns also. I would suggest you please diversify your investment into these three categories: large cap, mid cap, and small cap. Next, one must know how to invest in mutual funds. First, in order to invest in mutual funds, you need to open a demat account with any well-known stockbrokers like ICICI Direct, Zerodha, Angel, Sharekhan, etc. There are numerous stockbrokers available in the market. You can choose any one of them. Then you need to use your credentials and log in into their particular website. There are you can find a numerous number of apps given by Zerodha like Coin, ICICI Securities like ICICI Direct. Then you can go into that app through your mobile and you can also invest through mobile. Now, after going into the app or website, you can find different number of mutual funds. You can select a particular mutual fund by doing proper research and by consulting your financial advisor and then start investing. You can invest in terms of lump sum or you can do SIP. Guys, SIP method, systematic investment plan method, is considered best for mutual funds where you can invest money every month or you can invest quarterly or yearly. But SIP is most preferable method. Guys, now I am going to tell you what are the things you must know before selecting a mutual fund. Coming to the first one, CAGR of 5 years. What is CAGR? CAGR is compound annual growth rate. It means it is simply a measure of how much value it can grow over the period of time. Means what, suppose you have invested some amount in the first year, then after some particular time period, how much value your investment is giving returns. It is simply a measure of returns on your investment. Generally, CAGR of 5 years is considered for selection of a mutual fund. CAGR of 5 years of a particular mutual fund, if it is greater than 15%, it is considered as a good mutual fund. Generally, the more the CAGR, more preferred the mutual fund. The next one is NAV. NAV means net asset value. It is the unit of mutual fund. It shows how much is the present value of mutual fund. Generally, the growth of mutual funds can be measured in terms of NAV. You can check the period of 10 years before selecting a mutual fund, how the NAV has been grown over the period of time. Then next one is expense ratio. Guys, whatever returns you get through mutual fund, the mutual fund company will deduct from your returns only. Means that is the expenses like furniture, employee salary, electricity bill, etc. All these expenses they will detect annually from your mutual fund returns. So this expense ratio should be very very minimal for selecting a particular mutual fund. The lesser the expense ratio, the best the mutual fund. Generally, the expense ratio between 0.5 to 0.75 for a particular mutual fund is considered best for investment. The next one is exit load. Exit load is the amount of money detected by asset management company if you are withdrawing or closing the mutual fund within the lock-in period. Generally, exit load less than 1% is considered best, but there are so many mutual funds which does not charge any exit load if you are holding for more than 1 year. So exit load is the must to ensure before selecting a particular mutual fund. Next one is AUM. AUM means asset under management. It is nothing but the total amount of investment managed by a fund manager in the particular mutual fund. Say for example, SBI small cap mutual fund. For example, it is having a AUM of 100 crores. Okay. It means the total amount of value that is holding by mutual fund for investment. That is nothing but AUM, asset under management. Generally, the asset under management of mutual fund which is less than 10,000 crore is considered best for investment because it has a drawback that if the asset under management is more than 10,000 or 20,000 crores, then the fund manager is forced to invest their money, 65% of their money into the stocks. If the fund value is very less, say less than 10,000 crores, the fund manager can hold back his amount and see the particular proper situation and can invest in the stock market, because stock market goes in cycles. Sometimes stock market will rise, sometimes it fall. The best time to invest is when the stock market is falling. So the fund manager with less AUM, that is less than 10,000 crores, has a good advantage so that he can hold the amount and he can buy the stocks when the stocks are falling or generally on dips. So AUM less than 10,000 crore is considered as best for investment. Guys, if you like my explanation, please like and please share this video to your relatives and friends, and please do mention your comments in the comment box, and please subscribe my channel. This is my new channel. Hope you like my video and I have been posting continuously. Please help me out and please press the bell icon for your notifications. Thank you guys.